What is up everybody, Gifford here, and everyone's wondering right now where is the bottom of the stock market. So in today's video we're going to try to figure it out and predict from historical events. So the first point is that 99% of actively managed US equity funds underperform. We can also say this about retail investors who try to predict the bottom. Because the stock market is irrational and we can't predict everything 100%, what we're going to do instead is plan for the worst. And this brings the question of why am I going with this plan? Basically, from reading investment books, they all say that you can't predict the market, so it's best than just a plan and dollar cost average as it goes lower every week. And here is just a really good quote: you make most of your money in a bear market, you just don't realize it at the time. So what this is telling us is really this is the prime time to buy stocks when they're really low and being hammered, but at the time it feels really bad because all that's happening is that they're just declining and you're never making any money in here. But now is the time to dollar cost average into your positions and build them into a bigger position and wait until the market recovers so then the company can appreciate when everyone starts flooding back in. So what are we really trying to do here? And what we're trying to do is buy low, which is in the bear market, and then sell it high later on in the future. And to aid us, we've got a couple of indicators that we're going to use. One of them is the NASDAQ. So from my research, by looking at the NASDAQ, they usually say this is the first to fall in the markets. The second indicator I use is the S&P 500. So when it drops by minus 10% from its all-time highs, it's considered a correction, and if it drops by over 20%, it's then considered a bear market. Again, no one can predict what might happen, so it might get close to 20% and then after that do a total reversal and start heading back up again. But in the near future, from what's happening right now, I don't see that happening. So here's a chart of the bear markets and the bull markets which has happened in the last decade. Now you'll see here that we don't have the COVID crash included in this. But what this chart does say is that you can see that there's been a lot more bull markets than there has been bear markets. So while the chart goes back a decade, I just want to focus on really the last 50 years because the technology has moved on. So we can see here that if we count the bear markets from the last couple of times, the greatest that it's ever dropped has been 50.9%, and we've had a 44%, a minus 29%, and also minus 42%. So with this in mind, we can say that in the 2008 there was over 50% crash, therefore I'm going to try to predict that this is going to be our max loss. So while I don't know myself, the likelihood of the stock market crashing from where it is now from minus 18% on the S&P 500 down to 50% is going to be pretty low, so therefore I can plan that if we're at 80% now and we go all the way down to 50%, that gives us 34% drop. So what I'm going to do with the remaining money that I have on the sideline, I'm going to spread it over this amount to make sure that as we decline, I'm going to cover that decline and slowly dollar cost average into my company so that I don't end up spending the rest of my money and it could further decline. Therefore, my cost average is going to be really high. So another good report that I like to read is the Yardeni report, and what I'll do is I'll put a link down in the description if you want to read those graphs and his research because it's pretty good. So what this graph is trying to tell us here at 2022, and it goes back to 2008 when there was a crash, is that we're up around about the 4,000 mark, and you can see that here in the 2,000 mark it's not really that far down. So if we have a massive crash, it can actually go all the way down to this level down here into the 1,000, which means that we still have over 50% drop if things really get bad in the markets. And while this isn't really an indication of what might happen, this just goes to show you that when people are scared and they want to take money out of the stock market, it can drop because it's all to do with supply and demand for the shares in the company. And if people don't have any confidence that the stock market can make the money, then they're going to be taking their money back out and putting them into other safer investments. So just to summarize, my plan is not to spend all my money in one go, and really by having a plan, it stops me from spending all my money, because later on, if it starts declining quite a lot, we still have a lot of money in the sideline to pick up some companies for very cheap. And just remember that value stocks are regarded as 10 PE. The S&P 500 is still hovering around about the 20 to 25 PE, which means it is still pretty expensive and the stocks could still go down quite a bit. Also, one of the biggest things this year is that I don't have a lot of money to be able to invest like I did last year, and that investing is a long-term gain and that there's going to be many opportunities in the future if we just widen our time horizon. I've only been in the markets for 2 years and a lot of things has happened already, so save your money in the sideline to invest in good profitable companies later on when they become cheap is the way to grow your wealth. Well, that's enough for me today. Thank you very much for watching. Please hit that like button if you want to support the channel, and feel free to subscribe if you're interested in stock market investing. This video is just an insight on how I plan my deals and buying the stocks while we're in this decline at the moment, it's really useful to be able to have money in the sideline, and I have sold some stock at a loss to be able to pick up some opportunities into bigger stocks. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Investnow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. If you want to hear more from me midweek, you can also follow me on Instagram. I post there every other day. Otherwise, I will see you in the next video. Goodbye.